In today's video, we're going to talk about whether or not the trade desk, ticker symbol TTD, is a good buying opportunity on the dip. I'm going to go over, what my opinions are on whether it's more of a long-term trade, a swing trade, maybe like a short-term day trade, where I like to say, get in, get up, and get out. We're going to go over the technicals. We'll go over some of the fundamentals of the company as well, PE ratios, and all those good things to help you make a better decision to whether or not you feel the trade desk is a good buying opportunity on the dip. So let's get started. And to begin, I want to go over the technicals of the company. So here I have the weekly chart pulled up, and you can see clearly that this has been a bloodbath. I mean, we are down about 70% from the highs, right? Yep, exactly 70%. And we are down just from its recent highs not long ago. We are down 50%. Okay, so when this stock moves, it moves fast. And I made a video about this stock when it was trading at these levels around the 50s before, pretty much saying that I thought it was a good buying opportunity. And, it was. The stock went to rally after earnings, 60%? Wow. Huge gains there. But nonetheless, we're right back at this level again. You can see I have a support line drawn here, and this has been some pretty heavy support. So when it comes to trading the stock, right? So we're not looking at like a long-term investment. You're thinking like, Jack, I'm looking for an opportunity to get in, make some money, and get out. Then, I do think this is a great swing trade in that scenario. And I think there's a way that you can really take this trade and minimize your risk pretty well. And that would be by taking a position, about where it's at now. You do your own due diligence, but, start buying at this support level. And then you could say, hey, I'm going to put my stop loss under this support level. Okay. And if we break this level, which you have to decide where that's at, right? Maybe you go all the way down here. Maybe you keep it there, wherever it might be, right? You do your own, analysis on the company and technicals. But you put a stop loss somewhere around here, right? Because if we do break this level, this is a pretty big support level. I could easily see us, coming right back down to like $32, right? Which, let's see. That is about another 25% decline. That's pretty substantial. I'm not going to lie. Now, on the, flip side, let's say you're more of a long-term trader, right? Then you could look to start dollar cost averaging here, okay? And then, just don't go all in at this level. But, I'd feel personally pretty comfortable, and this is not financial advice, but I feel pretty comfortable taking a decent position size here. And then in the event that maybe we do break the support level, when we get closer to this level, start buying some more. Man, again, not financial advice, just my personal opinion. But with that being said, okay, those are just trade ideas, right? That's just solely based off the technicals. We're not talking about the fundamentals of the company, all right? And so in my opinion, this is where things get, a little bit juicier to me. That gives me a little bit more confidence that I feel pretty good about taking a position in this company. And so with that being said, let's look at some of the fundamentals. If you are not aware of what the Trade Desk is as a company, they are an advertising company, okay? And specifically, they are a programmatic advertising marketing company. This industry was valued at approximately $678 billion. Now get this, it's expected to grow to $2.75 trillion by 2030. So 5 years from now, this industry is pretty much going to more than triple in value, right? Or, opportunity. And so the fact that the Trade Desk is in this, right? And they're competing against companies like Amazon and Google, Roku. There's a lot of competition, right? And that's some of the fear around this company right now. But nonetheless, you tell me, do you think advertising is going anywhere anytime soon? Right? This is arguably the biggest thing for any company. It's all about advertising, right? Super Bowl advertisements and commercials and, advertisement on your social media feeds and Facebook ads. It's just everywhere. And I don't see that going anywhere because that is what drives sales. right? And one thing I like about the trade desk compared to some of these other companies is that their priority is solely you, right? They're not like, there's no conflict of interest. So again, that is another thing that I like about the company, right? So with that being said, let's jump into the financials. And so here I have the total revenue and the percent change of total revenue, since 2014. But you can see here that they're also giving us estimates, which is what I like, up until 2027. Okay, so pretty much saying, hey, this is what we are expecting the company to grow to. So nonetheless, looking at total revenues, I mean, this is a beautiful chart, right? Straight up, always beating, or always growing revenues, right? Now, I put up this other line chart here showing the total revenue in a percent change, right? So year over year, what they're growing. And you can see here, we're kind of, leveling out at 17% per year, which is still amazing. Like there's nothing wrong with that, right? Like big juggernaut companies, right? Like, I mean, it's normal for them to go through their growth phase where they're growing like rapidly, like look, 155%, right? Like that's insane. They go through that phase and then they finally hit like a mature phase, right? And it feels like that's kind of where the trade desk is trading now. It's kind of maturing out, right? But 17%, I mean, that is still great returns. Another thing to keep in mind, like it's really hard to beat these, revenue growths. Like, you can't consistently grow at 155% or 78%, right? You could do it for a couple quarters, maybe for a year, maybe 2 years. I mean, who knows? A NVIDIA, that's like a one-off maybe. But nonetheless, when you get down to 17%, now we're getting to a point where like, they very well could have a good year and they could, grow back to 23, 25, 30% revenue growth. And that's going to move the needle more, right? Like investors are going to see that and they're going to be like, wow, like, okay, like they were at 17%. Now they're back up at 20. Like, you get what I'm saying? Where, in other words, they're growing at 78%. Right? Like you can't keep estimating that they're going to grow at 78%. Like it's not realistic, right? Like it's hard to like to grow. It's hard to keep growing at 78% when the numbers start getting bigger, right? All right. So moving on to the next chart, we have the net income. All right. Not as pretty, but nonetheless, like we're still looking really good here. They did have a downturn here in 2021, 2022 before they started, seeing revenue growth again. And now we're, well exceeding what they were, making before or what they were netting before, right? So still looks good. I did try to find out some research of why they were having this decline during this time, and they didn't really have anything in the transcripts, but nonetheless, not too bad there. And then free cash flow also looks great, right? I mean, we had the years where we're kind of struggling when we're getting started, but ever since then, I mean, again, the chart looks beautiful here. Straight up, right? Lots of free cash flow. And then I pulled up this chart because, the balance sheet's pretty important in companies, right? We want to see that assets are greater than liabilities in most scenarios. And you can see that they've always kept a clean balance sheet, right? They keep growing their assets and, their assets are always well above their total liabilities, right? So when it comes to a balance sheet, it looks pretty pristine here. Nothing to complain about. And then we go into the net profit margin. Just what they're making, per product they sell, right? And realistically, you want to see this keep increasing, right? Obviously, you want to see net profit margins increase. 15% now. Nothing too crazy, but you can see that, they were at 29%. So I do feel that we could get back to that level. I'm not sure what they were doing to, net so much more than. Maybe they just, their expenses obviously weren't as high that year, whatever it might be. But they also saw a big decline here. Again, I mean, I don't know what. They had a huge slump in 2022. I'm not sure what was going on there, and if leave me, a comment down below. I would love to kind of be aware of what that reasoning was so we can, prepare for the future that doesn't happen again. But nonetheless, around 15, 16%, that's kind of where, their net profit margin has been. So nothing wrong with that. And then we have the forward price to earnings ratio. Okay. So forward price to earnings, this is based off what, analysts feel the company is going to be making in the future, as we went over before when we were looking, at the net income. And EPS is kind of the same thing. They're expecting the EPS and total revenues and income to grow. Um, and so, yeah, I mean, you looked at the chart, right? I mean, the chart straight up, right? Everything is looking good there, and the stock price straight down. And these are scenarios that I love. I think these are great opportunities to take advantage of making some quick money, right? With low risk. Because again, I mean, going back to this chart here, I mean, you can see that this is pretty much the cheapest that you've been able to buy the company, right? I mean, looks like they have peaked down a few times below here. I mean, we're not much though, right? Just maybe by a little bit more. They've peaked, but other than that, I mean, it's never gone any lower than that. And I mean, to begin with, like a 23 forward price to earnings, that's not bad for a company like the Trade Desk that has a lot of growth opportunity, like that, what I mentioned before, the fact that this is nearly a $3 trillion industry by 2030, which is not that far away. Like, there's a lot of market share to capture, even if there's competition. Like, there's plenty to go around, in my opinion. And I don't see advertising going anywhere. And at this point, like, it's not like you're, buying this stock when it was trading at, a price to earnings of 200, right? Like, then I'd be like, I don't care how low the stock was. If the price to earnings was 200, I'd be like, stay away. Like, it has a lot more to fall, right? But not in this scenario. So again, this looks great. I mean, those are kind of the few things that give me more confidence to take this trade, okay? All right, but as I was mentioning before, when I started the video, I was talking about whether or not, I feel personally, is this more of a swing trade, a day trade, a, buy and hold opportunity? And obviously that's up to you to do your research and you make that own decision. But in my opinion, okay, and this is not financial advice, this is more of a swing trade for me, okay? Now, with that being said, I have no problem. Like, I can sleep pretty well at night holding this stock because of what I was telling you about. I mean, the PE ratio is trading at 23. I mean, that's like below what the market average is, right? I mean, that's not bad at all, or around about what the market average is. For a company that has a potential for a lot of growth, that's not bad. As I mentioned, it's expecting to grow almost a $3 trillion industry in 5 years. Not even. Like, that's substantial growth, right? Like, there's a lot of runway for this company. The balance sheet looks great. The revenues are growing. Net profits are growing. Net margins have been increasing recently, right? I mean, there's a lot going for this company, in my opinion, and just the advertising business in general. I just don't, it's not going anywhere, right? It's not going anywhere within the next decade or so, in my opinion. But the reason why this is a swing trade for me is just because of how volatile the stock is. This thing could come out with good earnings. It could rip up, 20, 30, 40%. And then, as you can see, it could fall right back down. It's hard to stomach for some people, right? So this is not a day trade for me. This is something that I'm definitely willing to hold, for 2, 3, 4 months maybe. Let it ride out and ride it back up to these levels here probably, okay? Could it keep going? Absolutely. Honestly, it probably will. It's just not a risk that I'm willing to take. Like, if I can, make my, what is that? Wow. I mean, that's pretty crazy. I mean, back up to these levels here, I mean, that's almost 100% return, right? Like, honestly, if I'm up 50% on this, I'm probably getting out, right? Like, I mean, I'm not getting greedy on it. I'm going to make my money. I'm going to get out, and that's what I'm going to do. And again, it's just because the stock's so volatile. I mean, it's been in the past too. You can see this. I mean, it's, up and then we're down, 50%, back up 50%, just huge swings, right? So in my opinion, I'll take my money, I'll get out, and I'll move on to the next opportunity. And I mean, the best part about it is there is a chance that maybe you take your profits and the stock ends up falling again. Reevaluate why it's falling and then possibly take another position. I don't know. But nonetheless, is this a good buying opportunity? Yes, I think this is a great buying opportunity on the dip. I think the risk is, a lot less than what the reward is for this company. I mean, I showed you right there. I mean, there's no reason why this thing won't start trading back up to like the 70s and 80s. Assuming, earnings comes out and everything's looking, good for the future. And the downside might be like 20, 30%, right? So upside 100%, downside 30%. I mean, the upside's even more than that, honestly. But, hey, do your own due diligence. I just wanted to bring this to your attention. That is one of the main reasons for this channel, right? It's just to show you what I'm thinking, what's going through my head, trade ideas that I have. And you look at it and you make your own financial decision based off of that, right? One other thing I wanted to look at real quick, and by no means do I trade off of this, but I like to look at analyst price targets, and I also like to see how many analysts are covering the stock, right? 38 analysts are covering it, which is that's pretty substantial, right? I mean, that's a lot of analysts, which gives me a little bit more confidence about the price targets, right? You can see here low 34 and the mid range 73, right? That's kind of like your worst case scenario, not best case scenario, but the probably pretty doable to get back to this average range, in my opinion. A lot more buy or a lot more strong buy recommendations and buy recommendations, than there is hold. But nonetheless, again, I don't base my trades or investing style solely off of this, but it is something good to look at, right? Another thing I like to look at too, which this has been up, is short interest, right? Short interest right now is about as high as it's been, which makes sense. I mean, the stock has been beaten to hell. Part of that is probably because shorts are attacking the stock right now. But with that being said, all right, we went over. I mean, this is a solid company, right? They're making a lot of money. Like they're definitely not going out of business anytime soon. They have plenty of free cash flow, great balance sheet. There's the fear is just maybe the competition. But with that being said, with the short interest being that high, all right, all it takes is a little bit of good news for this stock, and that's probably one of the reasons why you see such big price fluctuations, right? Because shorts get squeezed out of their position, and that just increases the buying pressure, right? So when things get better, investors start stepping in, stock price starts increasing, right? Eventually, shorts get squeezed out. They're forced to cover. They have to buy back their shares. That increases more buying pressure. And that's when you can see a stock, move 30, 40, 50% in a week, right? And that's why it happens a lot of times. But nonetheless, that's all I have for you guys in this one. I hope you found this video helpful. Like I said, I think this is a great buying opportunity on the dip. Let me know what your thoughts are in the comments. And if you're still here, please like this video, subscribe to the channel for more content like this, and I'll see you in the next one.